Greetings. Welcome to my weekend market recap, 10th September 2022. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle superiorprofit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if options trading is suitable for you. I use the Q systems for my trading. All the Q components run on MetaStock and the technical analysis part runs on TradeStation as well. These are the different components. That was the last slide. Let's continue with the live systems, starting with Australian index all ordinaries. A look at the global markets. When all ordinaries was here above the upper boundary, I suggested not to buy. Then when it displayed the bearish flow right on that candle, I suggested that we could short using the flow trend following short setup. Last week price was already below the lower boundary and I suggested it was too late to short. On Thursday it displayed the bull release reversal signal from oversold condition. Thursday closed with a very bullish shape candle. Friday went up further and the tick below the candle shows that it also displayed bullish flow momentum signal. Last 2 days are bullish. Do I have any preferred trading direction? No, because right now it is in the middle of the range. When an instrument is right in the middle of the range, I avoid taking trades. I like to buy at the lower end of the range and short at the higher end of the range. Now it is in a no trading area and I will stand aside from Australian market. What about Japan's Topix index? Once again, we see how effective the Q memory trend lines are. In the weekly, we have this trend line support that is coming from far away. Earlier also it came to the trend line support and recovered beautifully from there. And this week once again it came near the trend line support and recovered from there. If you kept an eye on the weekly trend line support, then you could look for buy setups in the daily chart and you could take some long trades on Thursday near the open of the market when it opened with a sizable gap up. If you initiated long trades on Thursday near the open based on the weekly trendline support, then you already had a significant profit by Friday. What about my view as of Friday's close? If we look at the weekly, then I have the same comment that I shared about Australian index, it is now right in the middle of the sideways range. So I will avoid taking any new trade in Japan's topics. Once again, I could buy near the lower edge of the range. I could look to short near the upper edge, but right now it is in the middle and I'll avoid taking any trade in topics right now. Two of the global markets, I am not having any directional bias. What about China's CSI 300? That I have a bullish bias, and you probably know that because I tweeted about that earlier. CSI 300 index. In the previous recap, I showed that both the daily and the weekly were bearish. However, price was too close to the lower boundary, and I mentioned that I was not going to short CSI 300. Again, all these analyses that I am sharing before knowing the results, you will see most of them. I will not share a percentage, but you can check that out for yourselves. I think much higher than X percentage of the analysis are working out, and we just need 60% success rate in our directional trades to make a significant annual profit on total equity. So in CSI 300, I suggested not shorting. That was useful because price recovered. What is my view as of Friday's close? It has a very nice trend line resistance breakout in daily. Now, when an instrument is in a downtrend, I mentioned in the previous recap that I prefer to see either very high volume or bullish pressure to take a breakout long trade setup. We don't have a bullish pressure, we don't have very high or extreme volume. That would be indicated by a dot on the activity bar. We don't have very or extreme high volume, however we have high volume. Now if it was a stock, I would be cautious, but it is not a stock, it is an index, and for index high volume is enough to take a long trade in this case. Now I don't like to trade the indices or futures or ETFs because I have the ability, and if you are using Q systems, you have the ability to drill down into the constituent stocks and find the fundamentally strong stocks that are going up. Why will you like to buy an average of 300 stocks? You can find the best of the best among those 300 stocks and buy them. And if you did that, you could buy some stocks in the China market on Friday. Later on, I will share some Chinese stock that are listed in the USA market that you could also buy looking at the breakout in the China market. Remember, China market closes well before the USA market opens. So looking at the Chinese market's close, you could look to buy some Chinese stocks that are listed in the USA market and whose majority revenue comes from China. There are some stocks like that listed in USA. What is the direction of CSI 300? Downtrending. Still downtrending. However, what is my preferred trading direction? It's actually long. Why? Once again, it has a nice breakout with high volume, and on top of that we have a bullish flow, and if you notice, it went below the watermark support, stopped out weak hands, and regained the watermark support, creating a false downside breakout that is even more bullish. Weekly also has a bull release, bullish reversal signal. So all these are allowing me to have a bullish preferred trading direction in an instrument that is downtrending, and that's probably one way that I am ahead of other traders in catching the bottom in this case and sometimes catching the top in instruments. So at least one of the global markets we studied so far, I am able to decide on preferred trading direction and take long trades. Okay, what's next? Next is, let's look at the strongest of the global markets, strongest of all markets currently, that is India's Nifty 50. In the last market recap, I mentioned that after this very bullish candle, when we had big move up 3, extreme high bullish momentum, we had 2 successive inside days. That was when I had my last market recap previous weekend, and I mentioned that there was no sign of weakness in the market. Most likely we'll be able to take long trades, and that came true. Price went up during the week. Where did it stop? Right near the daily as well as weekly trendline resistance. Therefore, if we look at the daily now, it is inside a range created by trendline resistance and support. It is at the upper edge of the range. That is where I stop buying. I like to buy at the lower edge of the range, and at the upper edge I book profit and I stop buying, and that will be my conclusion for the India market. What is the trend? It is sideways. Do I have any preferred trading direction? No. Now let me elaborate a little bit on that. It is at the upper edge of the range. However, in this case, I am not thinking of shorting. Why? Because even if I have a bearish shape candle, maybe Monday, that will close very close to the trend line support, I will not be able to take a swing trade with attractive reward risk ratio. It is coming close to the tip of the triangle. When it is near the tip of the triangle, then I don't like to short at the upper edge or buy at the lower edge. That I do when we are somewhere in the middle of the triangle. That is why I am not looking to short. Am I going to buy? As I mentioned, not right now, but if it breaks above the trendline resistances, then you may look for buy setups. Will I look for buy setup in Nifty 50 itself? No, because for that the stop will be far away. However, if Nifty 50 breaks out, again you can easily look at the constituent stocks, find the strongest fundamental stocks, and find low risk Q unambiguous buy setups from there. Sideways moving, and I am not having any preferred trading direction. So far I have only China market where I am able to trade with confidence in the long direction. What about FTSE index, UK market? There also you will see the power of the trend lines drawn automatically in Q system once again. Last week we were near the trend line support in both weekly and daily. And let's step back. I had a market recap right on that day, bullish shape, bullish color candle with bullish flow, but looking at the series of bearish indecisions, I mentioned I was not going to buy. After that, price went up, but noteworthy thing was the bearish indecisions continued. And another thing I mentioned in, I think, the last market recap, that another subtle thing you could notice is that though it was going up, the candle color did not turn green or cyan again. Anyway, I wouldn't have bought along the way. That would be very helpful because price dropped sharply, and right when it came to trend line support I was ready to buy again. Others may be very bearish when we had these two successive, why two, one two three four successive days of sharp selling, huge selling, and successively increasing selling pressure days, 1 2 3 4 days in a row. They would be, most people would be cautious, but I would be ready to buy right at the trend line support. Later on, I will show that is the exact same principle I used to buy in the USA market, and I announced that publicly beforehand. So I would be willing to buy right at the trend line support. Those trades would work very well because price went up from there, never breached the trend line support in weekly daily. Friday closed with a bullish shape candle and also with a bullish flow. Once again, this shows two facts. One is the power of the trend lines drawn in Q systems. Another is the technique of buying at the lower edge of the range. Both of those can be seen in live action once again. You could buy on Friday as well because the trend line resistance here is quite a distance away. Again, I wouldn't buy FTSE index itself. I could easily drill down to the constituent stocks and find the fundamentally strong stocks and buy from there. I am also bullish on the UK market. So two of the markets I am bullish, the other markets I am indecisive, no preferred trading direction. What is the global index telling as a whole? Let's find out. Global index is inside a range. Near the middle of the range, I'll avoid buying. That was the majority conclusion when I looked at individual markets as well. It's range bound in the middle of the range. Global market overall indecisive. What about USA market? Let's first look at a few stocks I discussed in the previous market recap. And if you look back, the video is still there. Sometimes it may be useful to look back, rewatch the video and see how I analyzed those stocks before knowing the results. Interestingly, last week I think everybody was bearish, but not me. In the last recap, I actually shared three stocks. One I exited fully, I mentioned that was BKE. Three stocks I mentioned I was holding. An interesting thing is all of them were bullish trades. How did they play out? Let's look at that first before looking at the USA market. One stock that I discussed in the previous recap was a semiconductor stock, MXL, Max Liner. And why I looked at it, I explained that in the previous recap, semiconductors were falling sharply in general. SOX, the semiconductor ETF, was declining, and especially stocks like Nvidia, AMD, which had restrictions on selling to some countries because of new regulations, they were falling even more. In that context, I was looking at stocks, semiconductor stocks that were acting well. And that's how I found Max Linear or Max Liner, MXL, right on this day. That was Friday. It was not going down. Instead, it recovered from below the lower boundary. The candle color turned yellow, neutral from red bearish, and it displayed the bullish reversal signal. And I mentioned in that recap that yes, it had a series of trendline resistances and it still has a series of trendline resistances in both weekly and daily. However, looking at the strength of the stock technically and looking at its fundamental strength, I did take a position in the stock, and that trade worked pretty well. In fact, it broke a few trend line resistances, and if you took the trade the way I did using the analysis that I followed, and what was that again? When a market is weak and a specific industry is very weak, what did I do? I looked for stocks in that industry that were fundamentally strong, probably were being accumulated by funds, and that were acting well. In this case, acting well meant it went up, and I took a position in the stock. And if you did that on last Friday, you could probably book partial profit in the stock on Friday. I calculated it had more than 6% profit by now, and that would be enough to book partial position profit in a swing trade. That was one of the three bullish stocks I shared, and I mentioned I was holding them. Another two were biotech stocks. One was Insight. We had the market recap on this day. I mentioned I took a long position in the stock one day earlier, and on Friday I exited half position at slightly better than break even. I reduced half position looking at Friday's candle. However, I was still bullish in the stock. I didn't exit the full position, and that worked well. It displayed this very unique and effective, in my jargon, effective in trading is profitable signal, headwind reversal signal right at the bottom. That was on Wednesday, very bullish shape candle. Thursday it went up, Friday it went up further. So the trade that I initiated on this candle is also in a profit by now. The last stock that I discussed publicly and mentioned I was holding was DCPH. This was a stock I shared in the forum earlier. And how did I identify it? Again, I followed that analysis or approach that I described in case of MaxLiner. And remember these approaches because these are approaches we can use on all market conditions. And the approach can be implemented using Q systems easily. DCPH I shared publicly on my website around this area, and I was again looking for stocks that were acting well, that were going up when the market was bearish. Again, it had very strong fundamentals in terms of Q scorecard, cancer treatment related biotech stock. I took a position in the last market recap. I mentioned when we were here that I exited half position with a nice profit, more than 6% profit again. And I was holding remaining position. That was useful. Once again, we can see the power of the trend line support. It came right to the trend line support and went up. So the remaining position has even larger profit now. The weekly is looking quite bullish. I have booked partial profit. If you did the same, there would not be any reason to exit the remaining position. You could simply apply trailing stop and try to let profit run. Interesting thing is, in the last market recap, when probably most people, if not all, were bearish, I shared only 3 stocks publicly before knowing the results. They were all bullish and they all made a profit. That is the power of the Q systems. Now many people are turning bullish. Of course they will turn bullish, but I am well ahead of them. And how did I confidently find these stocks and buy them? And shared a series of tweets. If you look at my Twitter page, Twitter handle Superior Profit, and look at the tweets in time sequence, you will see throughout this week all my tweets were bullish side. All. There was not a single bearish tweet. And in the last market recap itself, that is weekend itself, I shared my preferred trading direction was long, so it was to be expected that my tweets would be bullish unless the market changed or my market view changed, and it did not change. The series of tweets, one after another, I shared were bullish, and if you are following my tweets regularly, you would know their accuracy rate is pretty high. That would at least alert you not to short and probably start buying, while I also did the same. Now, how could I do that confidently? Once again, how do I do that confidently week after week, month after month, year after year? That is because I use very unambiguous signals and only one trading system. I have no conflict looking at 10 different systems telling 10 different things, and these systems tell me everything from multiple angles, from market internals, externals, sector, industry, rotation, fundamentals, technicals. Now let's look at the things that I shared one after another that help me to decide my bias. First, let's look at the market ETFs, SPY. In the previous recap, when everybody was bearish, I mentioned this explicitly, that on Friday, 1 week ago, it was a very high volume down day when the volume was higher than Thursday. However, I noted that it could not breach that Thursday's low and the trendline support was holding. That was one reason I was of bullish bias in the previous market recap, and you can see the trendline support held very well. This week the first trading day was Tuesday, that held the trendline support. Wednesday, Thursday, Friday it went up. Also, all the 4 trading days of this week were high volume days. Tuesday held the support, Wednesday, Thursday, Friday went up, and that these Wednesday, Thursday, Friday would end up being high volume days. I knew that beforehand by using a component of the Metastock Zenith program. So I was confidently starting to buy during the day itself. By now I have probably 7-8 long positions. Several of them are in a good profit, and I have booked some profit in a number of stocks. The analysis looking at Friday's candle 1 week ago and the fact that trendline support held, price went up with higher volume during the week, I was ahead of others once again. What is my view now? And here is the interesting thing once again. Now it is at trendline resistance. Probably everybody will be turning bullish now, isn't it? Because they will look at the weekly candle, and weekly candle is certainly bullish. However, looking at the daily trendline resistance, I would not buy a lot of stocks at Friday's close. I already bought earlier. Some of them I booked profit in, at least partial profit, and some of them I am holding. So I will continue to hold them, but I would not buy a lot of stocks at the close on Friday looking at the trend line. Again, I am buying well ahead of others, and when others are buying, I am probably booking profit or being cautious if the trend line resistance is there, as is in this case. Notice another thing, SPY is bullish also because it has a bullish reversal in the weekly candle. That is bullish. But I am again not buying more now if I just look at SPY because of the trendline resistance. Now in the last market recap, I mentioned that not only SPY had trendline support, but it was also there in QQQ. Let's look at that. I am using a special template in Q Elite that shows the historical trend lines. that are broken now, and that also shows, of course, the active trend lines. Now we were at this trend line support 1 week ago. That trend line support was broken and immediately it recovered, creating what I called a false downside breakout. And once again I could see the volume was up during the 3 up days. I could know that intraday itself, and I would buy some technology stocks also. Once again, QQQ also has a trendline resistance, so I would not be buying many stocks at the close on Friday. I already bought them earlier. Dia also had a trendline support that I showed in the previous market recap. Once again, it created a false downside breakout that is even more bullish. Price went up, and once again there is a trendline resistance in Dia. Therefore, I would not buy many stocks at the close on Friday. See my way of looking at the market. I don't listen to other traders. In fact, there is only one gentleman whose videos I watch regularly. I am very fond of his analysis, Dr. Jeffrey Scott, but I don't watch anybody else's videos. And finally, I take trades using Q methodology. That allowed me to buy at the bottom. Now, not only this trend line supports help me to buy at the bottom, let me now go to the market internals. A very powerful single chart internal health check system, and let me mention, on this day before the market open, I was having a Zoom session with one of the Q traders, and I mentioned this to him explicitly that price already came down. We had trendline support in multiple market ETFs, and then we had a distribution count with a phoenix day, very bearish day. After price has already come down and price is at trendline support, I am looking to buy, and I told him that I was waiting for a big accumulation count and or an Eureka day. Usually the accumulation count comes on the same day or before the Eureka day, so that is more useful in timing the market and the stock buying. I mentioned this to him before the market opened, and right on that day we ended up having the Eureka day and the large accumulation count both. Eureka day is designed by Mr. Ian Woodward. May him rest in peace. Thanks to him, I use that as part of this market breadth total view. It is equivalent to, but in my view, better than the IBD follow through day. Why? Because IBD probably would declare, I don't know, I am not following IBD, but I know about their canceling methodology. They probably would declare a follow through day on Friday. But using this market breadth total view, I could even more confidently start to buy on Tuesday itself. That is 2 days ahead of others. That's almost a lifetime in swing trading. 2 days ahead of others. And that was the time to start to buy very confidently, because the trendline supports were already there. We had oversold condition in many places. Not only the market ETFs. If we looked at the internal health, the yellow line, that is percentage of stocks above 50 MA, was near the red level, that is the oversold situation. The 3-month new high low was at the oversold level. So everything pointed to a possible reversal. We had the Eureka high accumulation day, and we could start to buy very confidently on Tuesday itself. And as you saw, I started buying last week itself. 3 of the stocks I shared. So of course from Tuesday onwards I bought more, and I booked I should say not insignificant profit for swing trades in this week. What is my view? From internal health, it is bullish. On Friday, we once again had a large accumulation count and another Eureka day. The cyan color indicates Eureka day, the number 3 accumulation count. That is broad and deep buying. Is it overbought? No, the 3-month new high low is not at the overbought level. The yellow line, percentage of stocks above 50 MA, is not at overbought level. So I could continue to buy looking at internal health. However, I showed the trendline resistances in market ETFs, 3 of the 4, and that would be one reason I wouldn't buy a lot at the close on Friday. I already bought beforehand. Now, what kind of stocks are doing better? Growth versus value continuing to tilt down. So growth is underperforming. I'd like to buy value stocks. Small cap versus large cap, slightly tilting down. So it's not the time to buy small caps. That is the overall market view. We could look for mid cap or large cap and value stocks. And there are plenty of stocks to buy from. Many of them are also having short squeeze potential as shown from Q Vital fundamental scorecard, and I did buy some of those stocks. I will go through some of them. Now, though if you look at the longer term, small cap versus large cap, small cap is underperforming. But if you see last 3 days, and what happened in last 3 days, the market went up. The last 3 days, if we focus on, then small cap versus large cap is tilting up. So the recovery from this bottom was led by small caps. So let's refresh again. Over longer term, small cap is underperforming, but if you started to buy like I did, looking at the trendline supports and the Eureka day accumulation count, you would actually favor small caps. So small cap value, not growth. Growth is not doing well even the last 3 days when the market recovered. So you would focus on small cap value, not mid cap, large cap value, small cap value, maybe mid cap also, not large cap, small cap value, and you could look for stocks with short squeeze potential as I did. Now let's see how mega caps are doing using the mega cap custom index. The market recovered for the last 3 days and mega caps also recovered. Displayed a bull release, oversold condition, reversal signal on Tuesday, and Tuesday, Wednesday, Thursday it went up. No, not Tuesday, it displayed the bull reversal Wednesday, Wednesday, Thursday, Friday it went up. Again Friday it has a trendline resistance. That will be one reason I will not be keen to buy many stocks on Friday. And I think many people will turn bullish on Friday, but as you can see there are several reasons I will not buy a lot on Friday. I did share one buying idea on Friday and I bought that. I'll go through that stock, but that was an atypical stock, not a stock I usually trade using Q methodology. Let's look at that stock. That was AMC, and I shared it on Twitter on Friday. Let's look at the tweet first. I shared it in the morning session. AMC is a stock that sometimes moves a lot in short time, and on Friday it was up 9% by 11:30 itself. Weekly was coming up from a support daily was showing bullish flow momentum. So I looked for a low risk buying opportunity. You could do the same. I bought using intraday fine tune chart. Now, sometimes I trade options, you know that, and this was an interesting stock to trade with options. Look at the approach. If it moves, it tends to move a lot. Meme stock, very high short squeeze. The CEO came out with a statement that it has enough cash, doesn't need to go bankrupt like another entertainment company, another movie cinema theater running company did. Another company went bankrupt, but AMC CEO said they had enough cash and if needed, they can raise more cash. That's a news, but I don't trade based on the news. I looked at the chart and the fact that it can move a lot sometimes. So what I did, I bought slightly out of the money call. How much out of the money? If you see from Friday's close, it's 60 cents out of the money. I bought 10 call. I think about, I don't remember, either 30 or 45 days to expiry, at least 30 days to expiry. So little bit out of the money from Friday's close, but I did not buy at Friday's close. I bought during the day, somewhere in the middle of the candle. I bought 10 strike call. I paid some amount, and then what I did, I sold further out of the money call to make it a vertical. Which strike did I choose? I chose a strike that gave me back half of the premium that I paid for the 10 strike buy leg. So half of the money I got back by selling the second leg. Now, what was interesting about this scenario in this stock, this particular vertical? Because remember, if AMC moves, it moves a lot. So what would you expect? You would expect the further out of the money calls to have very high volatility. They would be very expensive. And that was indeed the case. I could structure the vertical in a way that gave almost 1:5 reward risk ratio. In a normal stock, it tends to give, if I buy out of the money call and sell further out of the money call to make it long call vertical, usually I tend to get 1:2, 1:2, maybe around 1:2 reward risk ratio, not more than that. But in this case, I was pleasantly surprised to be able to structure a vertical that gave me almost, if not more than 1:5 reward risk ratio using the vertical, and I was very happy to take that. I took it using intraday chart. I have some profit in the position already, and I am not in a hurry to close the trade. I have high reward risk ratio. I sized it so that I am okay to take the full loss if I need to. So I will not be in a hurry to close the position. How will I manage the position? I have 1:5 reward risk ratio. What I plan to do, that if I have some profit, let's say it goes to 1:2, that kind of profit, I just close half my position to get my money back, and then let the remaining position stay there till expiry. Once I get my money back, I don't have any reason to quickly exit the trade. Again, because the stock tends to move a lot, you may keep that in mind. I could structure the long call vertical in a way that I had 1:5. I was very pleasantly surprised to find that. I traded it. I think I traded it with very nice timing. Not perfect timing, but very nice timing. Other than this vertical, I also traded it using stocks, but the stock position I exited by the close of the day with a small profit. I didn't want to hold both stock and option positions. I'm holding the long call vertical with 1:5 risk ratio. Usually I don't trade AMC like stocks. However, AMC had some news. It has high short squeeze and actually fundamentals are showing undervaluation. Let's look at that. I looked at all of those. Took me only a few seconds before placing my trades. Let's look at AMC's fundamentals as per Q scorecard. You will see how very quickly I can decide on all the factors. I can look at all the factors before deciding on the trade. Okay, sorry, no. AMC's valuation is not good, but it has high earnings growth. I look for one of those dimensions. I'll show you one more interesting thing. I looked at industry also. That was another interesting thing. It is not showing good valuation, but it has high earnings growth and slightly accelerating earnings growth. I look for either high earnings growth or value stock. In this case, it had high earnings. I was allowed to buy. And as I mentioned earlier, market was so much down. Probably some people were thinking it will keep on going down, down, down. And in such a case, you will find many stocks with high short interest that gives rise to this short squeeze potential. So AMC was one stock I bought. I was aware of the short squeeze potential. I took advantage of that. And that was not the only stock that had short squeeze that I bought. Well, so I bought a good fundamental stocks, and the other interesting thing is I did that check also before buying. 94% of PR stocks were up. So AMC was not up only because of the news that CEO said that it doesn't need to go bankrupt, it has enough cash. The industry in itself was very strong. Yes, it was a bullish day, but not every industry still had 94% of stocks going up. What about the relative score? And that was the interesting thing. With one click, I could look at that. From Q Edge, the relative score of the industry, it had very high acceleration among the top 20% acceleration. So that also allowed me to buy. So I looked at technicals, I looked at the news, I looked at fundamentals, looked at industry strength, took me less than a minute, and I decided to trade using stocks. Then looked at options, good structure, an options vertical with high reward risk ratio, traded that as well. By the close of the day, I closed the stock position and I'm holding the long call vertical. Now let's look at the market a little bit more. I would like to, I would love to go back to a tweet I shared. And the more you see my tweets, the more you will see the value in putting some weight on them. I never say you decide trades based on my analysis, but you look at what I'm doing, they are very consistent. And there is some power in that consistency. And I'd like to show you one tweet. That was September 7th. Let's look at this tweet from September 7th. That was Wednesday. That was the first day market was recovering. This is how the sector industry stock 1 month to 1 day, and this was in real time just at the market close. This sector industry advanced recurrent breadth looked. We had all along red prior to that day, prior to Wednesday, and on Wednesday we not only had the market ETFs bounce up from trendline support or creating or bounced up after or at after creating false downside breakout or at the trendline support for SPY, but we also had a very clear, obvious, unambiguous reversal in the sector industry stock breadth. So it was showing strength all along sectors industry stock, and I shared it at that time. How perfect timing was that? Now let's compare this live analysis that I shared before knowing what would happen later on to today's picture. Everything is green for the week. 1 day, 2 day, 5 day. So short term, medium term, both are very, very bullish. But I didn't have to know about this bullishness on Friday. I knew it right on the day it happened. It turned around and I could know that in real time. That's why I could buy stocks confidently. Not only starting last week that I did and shared publicly, but along the way, starting from Wednesday, more and more. Now, longer term is bearish still. 1 month and 10 days. Does it matter for swing trading? No. For swing trading, I decide at the right edge, which is left edge in this case. And once again, I could decide that looking at real time sector industry stock breadth using QH. I think the only program I have seen so far available anywhere in the internet, at least Google is my friend. I use him quite a lot. I have not seen a single program that can help in deciding turn around from market breadth perspective the same way. No other program does it in the same way in real time like QH does, and it makes me profit, as you can see. So this week's breadth is very bullish. There is no doubt about that. Is it overbought? That's the next question we have to ask, and that answer comes from bucket analysis. Thanks, Ralph. It is very useful, very, very useful. Now, bucket analysis is also very useful, and those who are following me, they know that the Q systems grew over time based on feedback from many traders, and several gentlemen gave their suggestions, advice, input, and Dr. Jeffrey Scott gave many of them, and he was using bucket analysis earlier, but that was not real time, and I incorporated it in QH based on his input, and that is real time, and that is another beautiful, which is in my jargon, profitable aspect of Q trading. Why? Because right when the percentage of stocks in the lowermost bucket, that is below lower Bollinger Band, hit 51%. I actually captured that and showed that snapshot in the previous recap. The oversold level is 30-40%. At that time I tweeted also that was oversold. But now how is it? It's almost like a normal distribution, slightly still on the bearish side, but it has improved a lot after hitting 50% at the lower bucket, lowest bucket. Now lowest bucket is less than 1%, not oversold. Is it overbought? No, the uppermost bucket is at only 1.3%. So it is bullish, not overbought at all. Bullish, but is the bucket analysis bullish? No, overall bucket analysis is still little bearish, but that is okay. It is recovering from trend line supports in multiple market ETFs. I expect it to be bearish, and I am taking trades in stocks that were probably in a downtrend, came to support and now starting to go up, just like market ETFs did. So it's okay to have the market in a bearish state or market in overall downtrend. It's okay, perfectly okay. In Q techniques, I buy stocks using reversal trade setups in Q system. They make a lot of profit, as you can see. Still bearish in overall bucket analysis, not overbought. The sector industry stock breadth is very bullish. Only reason to be cautious is the trendline resistances in the market ETFs. But there are other signals in Q systems, very powerful signals, technical breadth, another unique aspect of Q system. And that is showing bullishness. We may continue to buy. Again, be careful because of the trendline resistances, but the technical breadth is showing some very powerful signals that are bullish. Technical breadth, weekly interval, balance between bears and bulls. First thing we notice is every category is hugely bullish. Just a while ago, this was very bearish, and I mentioned at that time it is very oversold, and then I could buy at the bottom. Now it is very bullish. Is it overbought? Actually, no, because it was too oversold. It's just recovering from there. 97% of all signals in even weekly interval bullish, 88% strength signals, 98% trend continuation, 99% of reversals also bullish. Everything is bullish, but not overbought, because it was recovering from oversold condition. And another powerful signal that we get from this graph, we actually have much more than 1% bullish headwind signals in the weekly interval. Whenever it is more than 1%, around 1%, it is very likely market will continue to go up. May not go up on Monday, but very likely it will continue to go up. Right now it is at 2.4%. That's why we can see clearly from these graphs that yes, it is very bullish, but it is indeed recovering from oversold condition. The headwind is an extreme reversal signal that is showing 2.4% on the bullish side. So I expect the market to continue to go up, to the dismay of probably many traders who were shorting. Am I correct all the time? No, but I already bought at the bottom, booked some profit. If it stops me out in some stocks, I'm okay with that. The signals are telling me to buy from technical breadth, weekly, daily. What about Friday? That's also very bullish. All signals 96% bullish, strength 99%, even reversal 66% bullish, trend continuation 96. This is very bullish. Another thing to notice, I'll show you few more things on the bullish case. See the percentage of gap ups on Friday, 59%. That's a huge percentage of gap ups. In my trading universe, that is all liquid stocks, thousands of stocks in this universe, on a day when we have 59% gap ups and then reversals are also more bullish than bearish, we cannot be bearish at the close of that day. So what does it all come to when we look at them together? The market is at trendline resistance for mega caps as well as for the market ETFs, three of them except IWM. So I am cautious about buying at the close of Friday, but there is nothing to let me short. Though it is at trend line, nothing to let me short. Sector industry stock advanced decline breadth and technical breadth and the headwind signals and the large gap ups, large percentage of gap Friday, nothing allows me to short. I may be cautious at the close on Friday not to buy too many more. I already had many long positions, but it is looking bullish from all the angles. But I would not like to buy when price is right at trendline resistance, you know that, and that pays me well over time. So I'm holding some long stocks. Now I'm approaching 1 hour time. Let me share one stock that I bought, and you probably got an idea about that kind of stock when you looked at the tweet I shared about China's CSI 300. I tweeted about China's CSI 300 breaking out during the week from a low price level. So it's expected I would use the Q systems to look for stocks in China market that were also reversing from trendline support, and indeed I did that. And let's look at this stock, very well known stock, Alibaba. Ticker is Baba. Remember I mentioned in this market when everybody was bearish, almost everybody, not like me, very few people bought at the bottom like I did. You would find many stocks with short squeeze potential. You may focus on them. You just need a click to find those stocks and then buy them. They have potential to move large distance in short period of time. Baba is one of them. Undervalued stock, not great earnings growth, but we are allowed to buy using either valuation or growth, in this case valuation, and again short squeeze potential. So between AMC and this stock, the difference from fundamental side is that AMC was high growth and Baba here is undervalued. Both have short squeeze potential. In this case, analysts are bullish if you want to put any weightage on them. How about the industry? 92% of peer stocks went up. That was also very bullish. Now let's look at the chart. Remember, I was looking to buy at the bottom. Let's look at Baba. Sorry, BABA. See this stock. Once again, I made beautiful use of the automatically drawn smart trend lines. Weekly and daily both had trend line support. Right on this day, it displayed bullish flow, created a false downside breakout, went up sharply, created a higher high, dropped at the market was dropping, stopped right at the trend line support. From Wednesday, when the market was recovering, Baba also recovered. So right on Wednesday, you could find Baba, fundamentally strong stock, at support with very low risk. You could buy that. I did the same. In this case, I shorted the put. As I have explained earlier, if you are okay to hold a stock longer term anyway, sometimes I am okay to hold the stock longer term anyway. I was of that view in Baba. It's not $1,000 stock, so I could short the put, and I actually have a sizable profit. I shorted 90 put, and the 90 put that I shorted, that is expiring next week. In this case, I didn't short longer term put because I was aware of the trend line resistance. I was going to book profit quickly if price went up to the trend line resistance. Now I did not book any profit at the close on Friday. Why? Because I looked at the Chinese market, how it closed. It closed bullishly. You saw I mentioned only two markets among the global markets I have bullish bias. One is China, one is UK. Baba is a Chinese stock. Most of the revenue comes from China. So when I'm bullish on the Chinese market, I'm okay to hold the stock longer term. Anyway, there is no reason to book profit in this case. I'll wait for a few more days. It's expiring next week. If it goes down below the trend line support, I'll hold the stock longer term. If it goes to the trend line resistance, I'll most likely have more than 80% of profit in the trade, maybe 90%. I'll be happy to book the position at that time. Now there are plenty of buying opportunities. Let's try to find some banking stocks. I saw in India market also banks are strong. I did buy some banking stocks in the USA. Let's see, on Friday I could do top down analysis. Maybe they have already gone up, but let's look at Q Edge. Give me, I know we are more than 1 hour into the webinar, just 2 more minutes. I want to share what I am trying to share is that there are fundamentally strong stocks at a low price level waiting for us to buy. You may not buy them at the close on Friday. I bought them earlier. But if the trendline resistances are broken in the market ETFs, or even better, if they pull back little bit and then breaks the trendline resistances, that will be a time to buy many stocks. Let's look at financials. Financials went up by 1.3% on Friday. Let's drill down into the financial stocks. Financials. Now, yes, on Friday it is not the strongest in terms of strength or acceleration, but as a sector it still went up. Now remember I mentioned I didn't buy this stock on Friday, but I am showing you some stocks that are very fundamentally strong that you could buy during the week, and they may be ready to be bought again sometime soon. If you look at the percentage change in the sector is very broad over 1 day, 2 day, 5 day. Financials sector is going up. Actually all the sectors are going up. Let's look at financials industries. And again, Friday was not the best day for financials, but I didn't buy these stocks on Friday. Let's look at the financial stocks. These are all financial stocks. I think the stocks I bought were regional banks, but that's okay. Why don't I go to regional banks? Regional banks, drill down to the constituent stocks, and I am looking for strong fundamental stocks. So let's click the 3 star. That no 3 star. Okay, then click 1 star. Either undervalued. I will prefer value stock, isn't it? Because value versus growth showed that value is doing better. So I'd like to buy value stocks. And some of these regional banks may not be large cap, mega cap. So that will also align with my preference to buy small cap based on market internal health. Let's see some of these stocks. Key systems, KEY. Let's look at that. I found the stock on Wednesday, right when we had the Eureka Day accumulation count. Market ETFs were going above their trendline supports. I found it at that time. I don't remember I bought it at the close on Wednesday or right near the open on Thursday, but I bought it at that time and I am holding the stock. How is the weekly daily? Let's look at that. Once again, I am using the trendline supports very well. That is where we had a bullish headwind, the other unique signal in Q systems. Right at the bottom, it didn't breach that low. Instead, it is gradually going up, came to the trendline support, went up with a bullish flow in weekly and with a bullish reversal candle in weekly. I bought right at the bottom using the weekly trendline support, daily bull release signal, daily reversal candle. And by now it has covered the risk distance, but I didn't book any profit. I am holding on to the stock. There was another regional banks also I bought in a similar way. I am not remembering the ticker symbol right now, but let's look at key systems fundamentals. Let's look at the one page picture from Vital. We already know it is 1 star, undervalued, I think. Yes. Undervalued. I prefer value stocks now based on internal health check, great earnings quality, and I did check this out also. It has a decent dividend yield of 4.1%. This company is making money, regional banks, not technology company. So, company making money with a nice dividend yield, undervalued stock, great earnings quality, and once again, Friday was a very bullish day overall. Even regional banks had 92% of peer stocks going up. But that's Friday. I already bought it before on Wednesday. And the weekly daily is looking bullish. Again, I wouldn't buy at the close on Friday, but if it pulls back little bit, goes up again, that will be a flow trend following long setup, and you will find plenty of fundamentally strong stocks that will give low risk buy setups in coming days. I guess so, because the weekly is having many bullish headwinds in Q Finder. So I'm bullish, but again, because of the trendline resistances in multiple market ETFs and mega cap index, I would not be buying many stocks at the close on Friday. On Friday, I shared only one long idea publicly, AMC, and I did take a long position in it. I am holding that very attractive risk ratio, long call vertical. We are at more than 1 hour point. Let's end today's session here. Thanks a lot for attending. I look forward to seeing you in my next session. Have a great weekend. And as this live analysis in YouTube shows, as the tweets I share week after week shows, there is absolutely no reason not to do that. Trade profitably. Thank you.